we consider telecom, especially in emerging markets, as a way to drive inclusion and equality.
Sustainable investments currently get a lot of attention from many asset managers, and new products are launched very, very frequently. Suad, you also just launched your own strategy called Triodos Future Generations Fund. How does your strategy differ from other sustainable investment funds?
Yes, Oliver, indeed. We launched the fund in Europe on the 31st of March, and as of the 1st of June, it will also be available for retail investors in Germany. I think what makes this fund, what makes our approach to sustainable investing different from others, is that we put impact, risk, and return on equal footing. And as a result of that, what we do is we look for companies that make a positive contribution to society at large. But we also are very strict in making sure that they don't do any harm. You could have a company that does something very positively, but if at the same time they are also selling weapons, we would say we will not invest in such a company. And I think that makes us different, and that causes our portfolios to be much more recognizable for investors looking for exposure to sustainable investments. Whereas if you look at some of the other, or some other ESG portfolios, you might see companies in there that would surprise you because their business has nothing to do with sustainability or because of perhaps past controversies. Mm-hmm. I think that approach of combining a positive impact screening with negative exclusion criteria, while also looking at the fundamentals of the business, that makes us unique, I think.
One of the big focuses of your fund is to focus on the well-being and development of children worldwide. Have you implement this specifically into your strategy?
That's a very good question. The way that we approach this is because we have set up this fund in support of UNICEF. We also took inspiration from their long-term strategy. And that strategy rests on 5 pillars. One is related to children surviving and thriving. One is related to access to education. Another is related to inclusion and equality. Fourth one is related to living in a safe and clean environment. And lastly, and perhaps best known, is protection from violence and exploitation. And these 5 pillars, we translate those into sectors that we can have exposure to. So if I take the example of surviving and thriving children, then naturally that leads to companies that have exposure to food, to healthcare, but also to some extent to household products, because good health starts with good basic hygiene. And another example would be if you look at inclusion and equality, we have translated that into telecom into the telecom sector, and the reason for that, while it might not be obvious at first, is that telco really is for people in emerging markets, and especially children, the best way to stay connected to the world, but also to receive education. And this is something that we saw clearly in the pandemic, when this was the only way that they could get education. So we consider telecom, especially in emerging markets, as a way to drive inclusion and equality.
You've already mentioned a lot of different sectors you invest in, but I would like to talk about one stock which I found in your portfolio, which is DSM, a chemical company from Netherlands. Why is a chemical company suitable for your strategy, which focuses on the well-being and development of children worldwide?
That's a fair question. But I think what is important to know about DSM is that this is a company that has been in transition for the last 100 years, maybe. Chemicals company now almost to a fully pure play food, health and nutrition company. So they're still divesting some old chemical assets, but once that's done, which will happen this year, it's fully focused on health and nutrition. And that in itself is not enough, of course. If we look at the things that DSM is doing, or the products that they are selling, we see that they are a key producer of vitamin A. Vitamin A deficiency is a key cause for pneumonia, and pneumonia kills nearly 1 million children every year. So by providing this vitamin, they are enabling children to survive across the world, or mainly in developing countries. But we see them doing much more, actually. They've also just renewed their partnership with UNICEF to focus on eradicating malnutrition in developing countries. But their product portfolio is I would say, so broad that they touch upon many things, like improving the nutritious value of rice, which is also across the world a product that's eaten by a lot of children. Is that they are really doing a lot to improve the well-being of children, but at first glance you might not see it. You have to dig a little bit deeper. What we also like about the company is that by going through this whole transition from, let's say, a bulk chemicals company to a focused company on health and nutrition, the fundamentals of the business have improved. The revenue growth outlook is much better. Margins are high. Balance sheet is very strong. So we think that makes it a very interesting company to hold.
We find that when we talk to fund managers that they generally tend to invest in healthcare stocks to profit from demographic change. Do you think that many fund managers underestimate the value and importance of investing in equities related to the well-being of children and their development?
I would say so for two reasons. One is that when we talk about healthcare, what typically comes up is aging population, people having more diseases, so they need more treatments, and so on and so on. And that's all true. But if we look at children specifically, we see that there are clearly unmet needs for children when it comes to healthcare. So we see interesting opportunities there as well. But this is a lens that not many people or not many investors apply. So they might overlook it. And one example is a company that we invest in, which is called OrthoPediatrics, which makes orthopedic devices specifically geared to children. And that sounds, you may ask yourself, though, why is it so important? Well, the big difference between children and adults is that children are still growing. So using orthopedic devices that are not tailor-made to the child is leading to worse healthcare outcomes. And we think this is very interesting. And there are other opportunities as well. If you look at specific diseases that affect children, there's quite a lot happening there as well. So we think investors may overlook this, but we also think that there are definitely interesting opportunities.
As we've heard now, you have a strong focus on a very specific niche. Is therefore the stock selection you can pick your assets from for your fund much smaller than in comparison to many other sustainable investment funds?
I would say that it's differentiated, simply because this lens that we apply, this focus on child prosperity, it creates a different set of exposures than when you would, let's say, have a more broadly based portfolio. And the universe is indeed a little bit smaller, but it's not a constraint. We can find enough interesting companies to invest in, and in doing so, make a portfolio that's well differentiated and in addition to perhaps existing portfolios.